Hello everyone, it's the Canadian Futures Trader here, and in this video I wanted to go over some tips to help people pass TopStep Trader, Earn2Trade, OneUp Trader, LeeLoo trading, or whatever other sort of trading programs come along. These are all essentially systems or websites and programs where you can trade. You trade within their rules. If you stick within their rules, meet their profit goals, you can become a funded trader. I'm not going to be evaluating each of the programs individually here. This is more just tips on how to pass. I'm going to talk a little bit about my background and my experience, but I have traded in all four of these. So let's get started. So first things first, I am not selling anything. I have no course to sell. I have no mentorship program. I have no chat room where I'm going to call it trades. None of that. And I'm going to talk a little bit later about people who are selling. I'm also not a trading coach or a mentor in general. I'm just a guy who's been doing these various programs. I've been in them for about 10 months. I also have my own trading accounts outside of the programs that I've tried out for, and so I'm going to draw on my experience and basically try to help somebody, you watching this video, get a little bit more insight and hopefully help you pass as well. As someone myself who uses YouTube when I want to research something new, it's the first place I go. There's a lot of just nonsense out there. There is a lot of people trying to sell stuff, whatever. So I just want to put out a video that isn't. It's just me helping you. It goes with my consulting background. People say, well, why would you make this video? I just like teaching people. I have a consulting background. I'll talk about that again in a second. Everything in this video is from my perspective and my experience. You might have a completely different trading style, a different trading plan. I am much more of a scalper, day trader. I like the products that I like. So just up front, I primarily trade the treasury bonds, namely the Ultra Bond, sometimes the 30-year note. I occasionally dabble in crude oil, and I also dabble in NQ. But when I say dabble, that is really less than 10% of my trading. Almost all of it is the Ultra Bond, which isn't going to be for everyone. It is much more slow moving than some of the other products, but I trade it for other reasons. So my background, I have an MBA. Does not help with trading. I'm not saying that because I'm saying, oh, I have an MBA degree, so that makes me a great trader. Not whatsoever. If anything, there's not much from my MBA degree that I draw on. The things I do draw on are statistics. I think the statistics classes I took really helped me somewhat in my analysis more than anything. And maybe somewhat just the overall business sense, if you will. Treating trading as a business is helpful rather than just going in it and just trading like a wild person. But that said, having a college degree in business or anything else does not necessarily matter at the end of the day when it comes to trading. I worked in the corporate world for 10 years. I got bored of it. As you work in the corporate world and you kind of move up that corporate ladder, you eventually make yourself a manager. And I didn't like being a manager. I didn't like managing people. My skill set was in the doing. I like doing the technical things that I was doing. I didn't want to manage other people doing it. So I got tired of the corporate world. I decided to go into consulting in the same sort of field, if you will, but more on a consulting basis. I did that for over 10 years. I put in quotes that I'm retired from consulting. I put it in quotes because when I think of retirement, I think of somebody who's worked their whole life. They're 65 and they retire, and now they're just going to kind of watch TV and golf and hang out with their friends. I'm not retired in that sense. I basically just kind of moved on from consulting. I got bored of it. I kind of had my fun. I'm not saying I wouldn't do consulting again, but it really wasn't passionate about it anymore. I kind of had my fill of working with companies and whatnot, and wanted to move into the next sort of phase of whatever I was going to do in my life. I built a few passive income streams along the way, so I could kind of float. I didn't build the stream so I could float. I just luckily had built those passive income streams and they grew. So it kind of got to the point where I was tired of consulting and said, well, I can kind of live off this passive income while I figure out what the next thing I'm going to do is. I was very bored though. You can only do nothing for so long. I spent about a year or two trying to figure out what I want to do next, but I wasn't taking it too serious. This is all going somewhere. Don't worry, we will get to the tips to pass. But just to give you a frame of reference of who I am and, when you're listening to this, basically I just got bored. And eventually I came around to trading. I thought about trading since college, off and on, kind of looked into it, kind of not, never really did it. So somewhere in early 2020, in all my research, which usually involves me going on YouTube and just searching, like, and watching countless hours of videos, I stumbled on TopStep. Like, somebody probably had a video about TopStep and futures trading, and it piqued my interest. So I dug more in, and TopStep would have been the very first program I did. I signed up in middle of February 2020. So it's now middle of December. So I've been doing these for 10 months. So since February 2020, I have tried everything from 25K evaluations to 150K evaluations. I put evaluations, combine, gauntlets. Each of the programs kind of has their own like name for them, if you will. Um, Gauntlets is what Earn2Trade uses. Combines is what TopStep uses. Evaluations is what OneUp uses. And LeeLoo, honestly, I'm not quite sure what they call them. I think they call them evaluations also. I'll probably use combine and evaluation interchangeably through this little video. I mean, it's the same thing. I've passed a few times. I actually passed and got funded a few times. But I failed about 5 times as more as I passed. And not only that, the ones that I passed, I blew them. I'm very honest. I'm going to tell you exactly how this has gone for me. I take complete responsibility for blowing them, as none of this is a knock on any of these programs, just so you know up front. Um, I blew them because I would either get over kind of cocky with it, if you will. I would try to go for the home run. Like I remember my very first, I passed a 50K combine with TopStep about, I think in my second month after initially signing up, I moved into what they call the pro account. And then I literally blew it by the second day. I blew that account because I was just going for a home run. I'm like, I passed these combines super easy. I'm just going to go for it and try to make 10 grand as quick as I can. And guess what? I blew it. So I ended up opening my own personal accounts about mid-year. I want to say June, July. I opened up two, one with Ninja Brokerage, one with Trade of 8. I'm going to talk more about those later and why I did that. But just so you know, I do have my own live accounts, and I am still doing some of the trading programs, if you will. I'm currently doing a TopStep and a OneUp Trader evaluation. I'm actually making daily videos on those in my progress. So if you want to see other videos, go check those out. So currently, actually that's what that last point is. So let's move on. So here's what you came for. You're probably like, guy, like, just tell us how to pass these things. Well, it's not so easy, but first let's talk about some don'ts. These are things you should not do. Again, this is my perspective. There's a list of about 50 things you shouldn't do. These are things that have impacted me the most, I would say. So don't bust over stupid rules. So I listed some of the rules that you're going to run into. Scaling plan, drawdown, economic news, past 110 PST. So talk about those really quickly. Scaling plan, for example, with TopStep, I am in their 150K account. It's up to 15 contracts. But guess what? On step 2, you have to ramp up. You don't get 15 contracts right away. You get 3 contracts right away. So I'm not allowed to trade more than 3 contracts for the beginning of that combine until I reach a certain profit target. It is very, very easy to trade more contracts than you are intending to. For me, and I've had several times where I had to reset, and again, this is why I call it a stupid rule. I maybe clicked, my internet kind of lagged, the click didn't register, so I click again. Like say I'm trying to buy whatever, my Ultra Bond contract, I click, nothing happens, I click again. Next thing you know, it registers both. I don't quite catch it right away. My eyes are maybe looking at something else, like the chart. Like I see it pop up that it bought. I look over the chart now, and next thing you know, I realize, oh shoot, like I'm in for 6 contracts instead of 3, and I've broken a rule. I call it a stupid rule, some of these, because in the real world, and I'm not sure if I address this later, but it's part of why I open up my own accounts. You can it's a very easy setting to set to tell them, hey, don't let me buy more than 3 contracts. Very easy setting, but something like TopStep or Earn2Trade, they don't let you have access to that. So it's very easy. They kind of set up a few tripwires. You have to be very careful not to bust. Drawdown, so I get a $3,000 drawdown. It is very easily mentally to be down, say, 2,000 and go, well, I've still got another $1,000 worth of buffer, and I'm just going to try to, play with that. It's the wrong way to think of it. Economic news, again, there was an FOMC meeting announcement, whatever you want to call it, just this past week. If you weren't paying attention and didn't know that was happening, and you trade into it, you're going to bust. The end of the day is going to come. You're going to get an email from TopStep saying you broke one of the rules. You traded during economic news, and next thing you know, you've lost your account. Don't trade past 110. So the market actually trades past 110, and I'm using Pacific time because I'm on the West Coast, you could, like, it's not like the market closes at 110 and you're just going to be out. No, you could still be trading and you're going to break a rule. You need to stop trading by 110, or whatever, wherever time zone you need to do the math yourself. So be very careful of the rules. Hopefully, I've hammered this home. I have busted, like I said, on the scaling plan a few times. Nothing sucks more than to be on, say, day 7 of 10 and you break a scaling plan rule. It has nothing to do with your trading ability. It's just a misclick, and next thing you know, you've busted a rule. Drawdown. Don't let yourself draw down all the way to the point where you're scraping the bottom of what your max drawdown is. And watch the economic news, etc., and watch the time. Point number 2 here, don't trade your max allowable contracts. This is just my recommendation. So I mentioned, like, I'm allowed to trade 3 contracts right now. Let's say I get to the point where I've made enough and I can trade all 15 contracts. Things happen very quickly when you're trading 15 contracts. I trade the Ultra Bond. Trading 15 contracts means every single tick, every single one move in the price is roughly 400. I believe I'm going to say 450. Let's just round to nice even numbers. $450. So you're trading 15 contracts and that thing decides to move 3 prices against you. You're down $1,500 in just like a second. It's happened to me. You don't need to trade the full clip in order to reach your profit goals. And that's one thing that I learned early on as well. You know, you go big. If you get a good trade, awesome. But if you get a bad trade, you're in the hole very quickly. So don't force trying to pass in X amount of days. So whatever combine evaluation you're in, whether it's 10 days, 15 days, that's the minimum number of days you need to trade. It's not the maximum. So I think, again, and I'm speaking from my perspective. When I see, like, okay, you need to trade 10 days, in my head, I'm like, okay, how much do I have to make every day to pass in 10 days? Like, I want to do this in 10 days. But the reality is you don't have to do it in 10 days. Like, go at your own pace. If you're not comfortable making, whatever you need to make, $500 a day to pass, like, you're more comfortable trading a smaller size and making 150, just drag it out. It's no big deal. Don't be an action trader. Again, these are points speaking from myself. Probably one of the things that's got me in trouble, that's not necessarily breaking, it's not their rule that's impacting me, it's my own trading that's impacting me, is being an action trader. Wanting to trade. Can't wait till Monday, can't wait for the markets to open because I'm bored and I want to get in. This isn't a hobby, and I've actually done a 180 on this. My new rule, or kind of motto, if you will, is I try to trade the very least amount that I have to. If I go in and my very first trade is a big winner, I'm done. I shut everything down. I said, I'm locking this day in. I am done. You kind of have to have a different, and this maybe goes into what you should do, but your goal is to meet a certain profit target and trade X number of days and not break their rules. And that is it. So there's a little bit to this that isn't real world. Say I was trading my own personal account and my very first trade was a big winner and I made $1,500. Yeah, I might not stop trading because, like, there's lots of trading days left. But when it comes to a combine, well, my goal is only $6,000. Like, I'm just picking random combines that you could be in. Like my OneUp trader, my current goal is $6,000 and you have 15 days to do it. If I have a $15 or $1,500 trade number 1, I'm already a quarter of the way there. Like, just shut it down. You still have 14 more days that you need to basically trade through. Just lock that day in and move on to the next. My recommendation. Opposite, don't be an action trader. Don't be chasing the market. Don't be chasing your losses. Things you should do. Trade less. So that's what I was just talking about. Be patient. This is something that has really, really, really helped me. Very much have the mindset of, I want to pass this in the very least number of trades that I have to. Consider that a badge of honor, that you can make one trade, have it be a winner, shut things down, wait till the next day. Have an exit plan before you enter. Another one. And this goes along with using stop losses. When I get into a trade with the bonds, I immediately have it set so it puts a 4-tick stop loss. I have witnessed, and this is where, 10 months of doing these, I'm not saying by any means I'm some pro trader, But what I am saying is that I've seen enough things and busted for enough different reasons that I can at least tell somebody who's completely new to it a few things that might help them. Use those stop losses and have an exit plan. I have seen trades, and again, the bonds do not typically move very much. I've gotten into a bond trade and had it spike 15 ticks against me in an instant. My screen flashed red so fast, I had no idea what the hell was going on. And next thing you know, I'm looking at it and I'm down whatever X amount of dollars. Like it happens. Another war story, if you will. This happened 2 weeks ago. LeeLoo trading. I was trading NQ for 2 hours. It had basically done nothing. It was, I believe, a Sunday evening, and markets had just opened. Markets were very slow. I'm thinking, I'm just going to try to scalp 10, 15 ticks. It's not moving a lot. Like, let me just try to scalp this ranging market. Not but 1 second after I had bought, it looked like it was at the bottom of its range and was ready to bounce back up a little bit. I buy. It spiked down so hard and so fast, it knocked me out. That was my very first trade on that combine, and I broke a rule within seconds. Like, I almost had to laugh. I was in shock. I was like, I can't believe this. Like, for 2 hours, it's done nothing. And literally about a second or two after I bought, like before I even had a chance to put a stop in, it just went wham and shot straight against me and knocked me out. So, war stories on my behalf that will hopefully help you. Another one, using kind of different analogies or sayings, if you will, be right or be right out. So that's one where, I enter a bond trade, I set my stop loss. If it starts to move against me, I don't have to wait till it goes down 4 ticks. If the landscape changes and all of a sudden, right after I buy and go long, all of a sudden there's a lot of sellers who pile on, but the price hasn't ticked down yet, it might be a good time to just get the hell out. I was wrong. Sellers are coming in, get out. Don't wait to eat 4 tick loss, just get out now. Believe in yourself, however you want to take this. You need to have a plan. You need to know the reasons why you want to trade. If you honestly believe you have the skill to do these and you're willing to put in the work, then you have to believe in yourself. So all those times, like when I busted, my LeeLoo account gets spoiled on the first trade. My other account, I get into a funded account and I blow it in 2 days. I still believed in myself. I knew what stupid mistakes I made, and this goes into the next point, and I try to learn from them. Learn from every mistake, big and small. Action trading, over trading, not using stops, trying to fight back from a huge loss, trading when the market's super slow, and trying to just know why you're trading and learn from all those mistakes. Protect your profits. When you are up, it is very mentally discouraging to give up those profits. So I now try to my best, and again, I'm still a work in progress, try to protect my profits. So if I'm up $1,000, take a step back for a minute and think, okay, I just made $1,000 on this trade. I am not giving up more than 200 of that. If I give up more than 200, I am shutting things down because I'm already up a good amount for the day. I don't need to be up even more. Like, that's why I try to trade less. But if I am going to continue to trade, I am very tight on how much I will give up. But again, a lesson that I still need to learn. I'm getting better at it, but I'm not perfect at it. I've had my days where I'm up, and then the next day, I, have a big losing day. So, never let a winning trade become a loser. This is one for me that I heard it somewhere in a podcast, and I'll talk about podcasts later that I think you should listen to. But it very much rings true, and this is something that I am good at now. So if I'm in a bond trade and it moves up 2 ticks, you are damn sure I'm moving my stop loss to break even. Now, does sometimes the price kind of come back down, hit that break even point, knocks me out? Yes, but guess what? I had enough experiences where I went into a trade, it moved up maybe 2 ticks, and I'm sitting there thinking, okay, I'm going to let this thing run 4 or 5 ticks, and it just doesn't. It comes back down, gets to my entry point, and continues down. And now I'm in a loser, and I get out for, say, a loss of 3 ticks. You feel pretty stupid when you're like, I could have got out for a 2 tick profit. Instead, now I'm eating a 3 tick loss. So I am a proponent of, once you're up a little bit, move that stop loss to break even. Yes, it means you're going to bust out sometimes at your break even, but that's a lot better than taking the loss, and so be it. So I very carefully manage my trades once I'm in the profitable position. I'm not taking a loss on a trade that was profitable. Going back to all these gurus, and why I focus on this quite a bit is because I know for myself, when I started out in trading and was researching, I found a lot of useful content on YouTube. I found some that was not so useful, but it seemed like everybody was selling something. Um, I have not paid for a thing like a course or a chat room or any of that. The only thing I've paid for is like combines, evaluations, resets. I did buy software that I really like, that I personally use. It's Jigsaw Day Trader. I paid for that as an investment into trading, but that is literally all I've paid for. I would not sink a dime into any of these gurus. Now, I come from industries in some of my other past businesses and current passive businesses where I've seen it before in there, so I'm very much alert to these types of people who want to act like experts and sell you something even though they're really not experts. They're just trying to make money off of you. So let me just read through the points here. So pretty much all trading expert gurus, whether they're on YouTube, a Telegram group, they post on Twitter, they post in a Facebook group, they are on, I didn't listen here, they're on TikTok, they're on Instagram. They aren't worth your time. More importantly, they are not worth your money. Please, please, please believe me. Never ever pay someone for their tips, their trade group, their signals, their get rich scheme. They will make everything look as easy as possible, as flashy as possible. It's the usual them standing in front of a Lamborghini, spend $2,000 on my course and you'll be making millions by next week. All of that. Sounds too good to be true. It is. If even after watching this video, you are still thinking, oh, but I found this guy, he seems legit, blah, 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 I've heard it all, go research them, please, before you get into anything. A good starting point is futures.io. It is a trading message board. There are reviews on there of pretty much every trading program, and I can pretty much guarantee you that 99% of them are scams. But the good thing is you have seasoned traders on there who will, and you also have people who've gone through it and will say, yep, you know what, I paid $2,000 for XYZ course, and at the end of the day, it was junk. It was just a bunch of like stuff you can learn for free on YouTube. I really learned nothing. So go research anything that you get into. My last point is, and this is part of why I'm not really into this stuff too, like, you got to be in this for the long haul. If you're getting into trading, hopefully you're not doing it to make a quick buck. You're doing it because it's going to be your new career. It's going to be maybe your second income source, whatever it might be. Do you really want to build a career on just trying to rely on trading signals from some random guy on the internet? Like, come on, just take a step back. Actually invest the time and learn proper trading. Don't rely on these other crutches that aren't even crutches to sort of make you money. Have a desire to actually learn how to do it properly yourself. So why did I open my own trading account? So I just put this in here because that's the question. Some people ask me, they're like, well, why are you doing trading combines if you have your own trading accounts? And, why have your own trading accounts if you're trying to get funded in these combines? Like both ways. So I think everybody's eventual plan is to get funded, like do the trading combines, evaluations, get funded. It's my plan. I don't know why else you would do them. B, make lots of money. I think that's all of our goal. C, trade my own account so I'm not giving 20% to whatever random company. So if you haven't looked into it already, once you pass the trading combine, you get funded. Your first X amount of dollars, usually it's around $8,000, is 100% yours. After that, it's an 80-20 split. You keep 80%, 20% goes back to the company, say TopStep, which is fine. But there will come a point down the road where you're making, say you make $10,000 in a month, and you have to give $2,000 to them, and you might say to yourselves, well, why, I could just trade my own account and like keep the entire $10,000. So I think that's everybody's goal. So I want to get a head start. I opened my account. So I know it takes a few weeks, and it does take a few weeks to open an actual trading brokerage account in futures. So I wanted to get a head start. I was a little bit ahead of myself since I obviously hadn't got funded yet, but I still just wanted them. There's no cost other than the initial deposit, but it's your money. It's in the account. There's no cost to them. So I set those two up after a bit of research. I want to try trading as well on my own without having to dance around the rules of, say, TopStep or Earn2Trade, whichever. I could actually just set in my trading program, hey, don't let me trade more than two contracts. Don't let me trade, if I lose more than $500 in a day, cut me off. So I can set my own parameters. And by breaking a rule, it either just doesn't let me break a rule or I don't lose an account, by doing that. So you might say then, well, you have your own trading accounts where you can set your own parameters. Why still trade TopStep, LeeLoo, OneUp, all those? And the short answer is leverage. So let's talk about that here on this slide. I'm sorry that I know this presentation is a little bit long, but so as an example, this is Trade of 8, which is where I have one of my accounts. You'll see three products here: crude oil, Ultra Bond, and the U.S. Treasury bond. That's the 30-year bond. And you'll see three numbers. And those numbers are the initial margin, the day margin, which are the same, and overnight. So I'm a day trader. I close out my positions before the end of the day. So the number we're most interested in is that middle column, the day margin. So when you trade your own contract or your own account, you need to have X amount of dollars in your account as margin for these products. So I trade the Ultra Bond, so it's the middle one. The margin is $47.85. So for example, trading three contracts times $47.85, I would need to have $1,400, roughly $1,500 or $15,000, in my account just to trade those three contracts. Now, another example, my OneUp 100K account, I'm allowed to trade up to 12 contracts. I would need $57,000 in margin just to trade those 12 contracts. So what you're getting with these programs is leverage. And here's TopStep 150. When I trade 15 contracts, 71K in margin. I would need to have that in my account just as margin. Plus, you would need some buffer just to work with. Because say you have exactly 57,420, and your very first trade is a loser, and you have to get out of your trade. And guess what? Now you can't trade 12 contracts anymore because you're below the margin requirement. You can only trade 11 contracts or 10 contracts. So you have to put up a lot of money, and that's what these programs do. That's what I am personally looking for. I pass OneUp, I get a funded account where they allow me to trade 12 contracts. That is a lot of leverage, and that's $57,000 that I don't have to put up myself in order to trade. So that's the reason I personally do it. I do see a point in the future where I would. So say, and I don't know what that point is, but where you make X amount of money, and you do. Say I had $300,000 sitting in my trading account. Yeah, maybe at that point I just trade on my own. I don't keep giving, OneUp 20% when I have plenty of room. But for now, I want to use the leverage they provide. So last things, guys, thank you if you watched this whole video. Hopefully this, if anything, will make it worth it. Some helpful resources and tips for you, things that have really helped me. There is a podcast called Chat with Traders. It's hosted by a guy named Aaron Fifield. Hundreds of episodes. He interviews traders from all different sort of niches. So Forex, stock, futures, crypto. There are tons of great episodes on there. If you want to get started, look for episodes. I believe it's 199 and 200, where he does a summary, kind of a best of. I think he did like a best of trading psychology, and he also did a two-part series, best of trading risk strategy, where you can get little snippets of kind of the best of. They're really good, and then you can dive in and listen to all the episodes. There are some of his episodes I've listened to, like I have them saved on Spotify. I listen to them probably once a month because these traders, he's talking to traders with years, decades of experience, and they have invaluable information. So listen to that. If you are a reader, there's tons of books. One is The Playbook by Mike Bellafourier. He is one of the co-founders of SMB Capital. They are also a prop shop in New York. It is a good book. I recommend it. Meditation. I'm the first person who would have laughed at somebody if they told me to meditate, say 5 years ago. But eventually at some point I'd seen it enough in different people mentioning it related to trading, clearing your mind. I was like, you know what? Let me give this a try. Let me be a little bit open-minded. And sure enough, started meditating, really got more out of it than I was expecting. So now I try to meditate every day. I'm not great at doing it every day. I'm still getting into that habit, but it really does help clear your mind. and kind of goes into this next point. So I made myself a list of just 10 things to remember every day, and I read it before I start trading. So what I try to do is meditate, just clear my head of everything else. Clear your head of, oh, I need to go pick up groceries later. I need to, pick up your kids later. I need to walk the dog. When do I get paid? I have to meet, my friend, tomorrow for lunch. All the stuff that's just rattling our brains. Meditate clears it right out. Then read your list of 10 things to remember. Mine is things like, some of the things we talked about. Don't overtrade. Try to have one good trade, be a winner, and then be done. Wait for like an A plus setup. Just like wait, be patient, basically. All these things. So just a list, like I didn't want it to be too long. Like I could list out 50 things I should remember, but it's like I picked the 10 key things that I really want to drive into my brain. You do this day after day, they start to stick in your head, and you'll be there. And at some point you'll be trading. You're thinking, I'm going to enter this trade, and you'll have a flashback to your list. You'll think, you know what? This really isn't like a great setup. It's just I'm really trading just because I'm bored. And you'll step away. And then that's when it'll all kind of click, and you'll go, oh, you know what? That meditation stuff, that 10 list, that actually worked because that prevented me from just jumping in and doing what you might have done in the past. Lastly, check out trading forums. I recommend Futures.io and Elite Trader. I probably recommend Futures.io slightly more. A lot of seasoned traders on there, very well run, tons of invaluable information. Ask your questions, get answers, and just use the search function and look around. And there you go, guys. So hopefully this video helped some of you. I know it's rather long. I do tend to ramble. But if you have any questions, leave them in the comments below. I'm happy to answer them. I'm planning to make more videos in the future just about the different pros and cons of each of the different, like TopStep, Earn2Trades, OneUps, all those. Maybe focus a little bit more on specific things you should do. Maybe focus a bit more on trading strategies. We will see. But all of it comes from just a place of wanting to help others and educate them, not one thing to sell you, and if anything, try to steer you clear of people trying to sell you stuff. So I'm going to leave it at that, guys. Good luck with your trading. Let me know how you're doing. Let me know any questions, and I'll see you in the next video.